Hi, this is Zach May with the Bulletin Board Heroes here at Vox Markets. It's Sunday, the 14th of August. Starting off with the FTSE 100, where we closed right on 7,500. We've been consolidating around this area for a few days at least. Next level up is up to 7,600, which is that resistance line there from back in April. Hopefully that could be hit by the end of the month or sooner. Support around the 7,460 area, that broken April resistance line, the more shallow one. Positives here are the 200-day moving average that's still rising. Normally, a rising 200-day line is a dip to buy into if we dip down to that. And we've got the RSI around the mid 60s, which is still off the overbought area, even though we've come up 500 points over the last month or so. In the unlikely event of a breakthrough 7,600, we've got the top of the 2-year rising trend channel, 8,100. I suppose that would cheer people up quite a lot if we got up to there. You can see that that channel has been pretty firm since the pandemic low, so we bounced off that, hit that a few times as well. So it's still very much in play, and 7,600 will be the trigger for a very welcome move towards 8,000 and new all-time highs, which I suppose is a bit of a contrast to the current fundamental situation, the cost of living crisis. What might build confidence that we're ready for a breakout would be the 50-day moving average starting to curl up. So at the moment, it's still slightly going lower, but if that starts to change during the week or over the next couple of weeks, then that might be an indication that there's going to be a break to the upside, and that would mean that we were in the run up to a golden cross. And that is a very strong technical setup if we get it. Below the 200-day line, risked a dip towards the 50-day moving average. That's currently around 72.86. On to Bitcoin, which also seems somewhat poised at the moment. The reason for saying that is that we had that little bear trap below the 50-day moving average that was rising, so bounced off a rising moving average, which is normally a good sign. We've got this almost sort of saucer shaped formation since the beginning of the month, so that is also a positive. We're just looking for an end of day close above the 25,000 level, recent resistance, a psychological point as well, and that could take us up towards 27,000, the top of that falling trend channel from November. But a move through 25,000 probably being enough for most people to say that the worst is over for this rather battered market. Moving on to the stocks, and the stock which is also, you could say it's been battered a bit of late, is Asimilar. Just the first signs that there's going to be a turnaround here. Obviously, the stock hit over the course of the post-autumn period from 40 pence plus. The lows recently around 7 pence. The reason for the relative enthusiasm is that we've got bullish divergence, so lower lows, but higher RSI low there, so that's an uptrend line in the RSI window. Also broken that line of resistance from April. That's at 7 pence. And the final piece of the jigsaw is that we gapped up on Friday. There's a bear trap gap reversal. And that suggests that above 7 pence, we could head up at least to the 11 pence area, which is the 50-day moving average. And also that was temporarily support on the way down. Best case scenario by the end of next month would be up to 14 pence in the top of that post-June triangle, but without getting too excited, just the first hints that there's a turnaround there at Asimilar. On to one of the stocks of the week, which is Ascent, and here just underlining the fact that the shares delivered a key reversal up and a gap higher through the 50-day moving average, just turn of the month. Got a rising 50-day line as well, so the initial target here was 5.3, 5.4 pence. But while we're above 4.4 pence the old April-May resistance, there's a chance of a bigger move to the upside. That would be to the top of that April 2021 triangle at 9 pence. But obviously, let's get to 5.3 pence first. But just for fans of the shares, that is a possibility. And it's added to by the way that we've had a very extended bullish divergence there on the lower lows that we had going into the first part of this year. So looking rather better, both fundamentally and technically, for Ascent. On to Atome, which is Looking, it's got a similar sort of situation there with a gap higher, in this case through the 200-day moving average. That's rising, and we closed the week above the 50-day line, which was very welcome at 95 pence above that, looking for old resistance on the way down back in June at £1.24. Maybe that could be hit as soon as the end of this month. Stop loss below the recent swing support, 92, 91 pence, something of that order. Bit of a long shot next with Clontarf, but just the first signs that there's a recovery here. Seems to be a bit of a falling knife situation, but we closed the week right on the 50-day moving average at 0.06. We've got bullish divergence there, so we had lower lows going to August, but the RSI floor there rising, and at the end of day close through 0.06 could give us the rather unlikely sounding scenario of a move to 0.12, maybe by the end of next month. But that bullish divergence there, especially the last higher low there, does suggest that at least while we're above 0.05, we've got a chance of a little bit of a turnaround there. Distil is the next contender, and here we've had one of our favorite setups, actually two or three of our favorite setups. So we've got, and we've had bullish divergence there. So we had that low, that final low there in June below 0.9 pence, but we had an higher RSI trace. So that's the backbone of the setup here now. We closed the week above the old support there in March, 1.2 pence, above the 50-day moving average at 1.25. And we also closed above the top of that gap. So gap close buy signal in the mix. There's multiple reasons for excitement. So the longer we stay above the 50-day moving average at 1.25, the greater the chance of a move towards the top of a broadening triangle from back in October. And that's as high as 2.4 pence. Maybe we see that by the end of next month. Moving along to EKF, which another relatively obscure situation, but here we have it. Nice inverted head and shoulders, a rather extended one. So the left shoulder there, multiple heads, rather illiquid heads there. Broke back above the 50-day moving average at in the middle of last month, and stayed above that ever since. That's rising now, so that's a positive. And we broke the neckline of the inverted head and shoulders on Friday around the 39 pence level. While we're above the right shoulder, 37, looking for the 200-day moving average at 52, and then up to the top of that rising trend channel from February at 60 pence, possibly as soon as the end of next month. Stock which I haven't covered for quite a while is back, Gaming Realms, and here we broke that resistance line there from October on Friday, which is much appreciated. Also got a rising 50-day line, which helps. And above the broken resistance line there at 26 pence, looking for 38 at the top of that rising January trend channel. At this stage, early really obviously well below 25p, hurting the idea of recovery for Gaming Realms. Just thought I'd give Igas another spin because apparently it doesn't get enough coverage on with the Twitterati. Here we've got that rising trend channel upgraded targets. We firstly had 45 when we were around 35. Then we were looking for 60 as a best case scenario target. Now we're looking for 110, which seems out of this world. But the longer we stay above 60, looking for £1.10 by, well, maybe over the next 1 to 2 months and the way things are going, certainly within that could actually be within 8 months. So looking very strong indeed. 50 and 200-day moving averages both rising in parallel. But you can see there really that the big breakout here was the break of 39 pence resistance. I haven't really looked back since. On to President Energy, which I believe had some news during the week, positive news, obviously. If I can call up the chart, here you can see that finally broken, sort of definitively broken that resistance line there from December. That's around the 1.25 pence area, and above that, looking for 1.4 initially, which is the 50-day moving average, and then a best case scenario target would be up to the 1.75 pence area, which is the 200-day line. We're backed by bullish divergence. We had that final lower low, but the RSI much higher in this case, which does suggest there is momentum or potential momentum behind a turnaround. Only back below 1.2. Well, the stop loss really, no new lows is what we really want there for President. On to pure gold, which also looks like it's emerging from the shadows. We've got bullish divergence as well, with the lower lows that we've had for August. Broken that line of resistance there from June, around 6.75 pence, and above that looking for around 11 pence initially, which is where the 50-day moving average currently lies. Best case scenario, maybe over the next 2 to 3 months, is up towards the top of that broadening triangle from back in April at 25 pence, but I think most people just settle initially for 11 pence while we hold above the 7 pence area. Just a couple of stocks to go now. First one is Polarian and or Polarian, actually. Here we've well, here actually I missed the boat. I think I did the real entry point here was the break of that resistance line there from back in September. So let's say even if you were waiting for the end of day close there, it's around the 49.50 pence area. Got the rising 50-day moving average, closed the week with price action wholly above the 200-day line, and while we're above 200-day line at 53, looking for as high as 77 pence, maybe by the end of next month or sooner, which basically take the shares back to where they were back in the autumn. So a decent recovery situation there after quite a lot of pain. And we also have bullish divergence of the lower low for August, but no lower RSI trace. Very helpful in terms of flagging that turnaround, and it's a shame that it wasn't spotted earlier, or I don't think it was. Going on to the last stock, which is S4 Capital, where I know in fact, a lot of the smart money has been in here looking for this to be a recovery play. Friday was a decent day in the sense that we broke that recent neckline resistance at £1.47. Above that, looking for the shares to fill the gap up towards £2.10 over the next month or so, and also hit that resistance line there, which was in place since way back in September last year. So decent setup there for S4 as long as we hold above £1.47, which it looks as though we probably will now. That's it for me today. More updates during the week.